I'm Brady Serold, Senior Vice President of DI at E4 Insurance Services. Welcome you to The Brew, building relationships every week. Thanks for tuning in. For those of you joining The Brew for the first time, welcome. We like to start the Brewcast by celebrating today's national days. We have Share a Hug Day, National Cheesecake Day, and Paperback Book Day. So I guess after you get done reading your paperback book, you can have a piece of cheesecake and hug your significant other. So I guess that's a tie-in with the three. Today we're finishing our July's lineup on Worksite and Voluntary Guarantee Issue. I'm joined here by Rob Czerwinski, Head of Worksite Sales at Illinois Mutual. We will be discussing worksite benefit solutions available at Illinois Mutual and explore the best ways to encourage participation, educate employees, and enroll them in the value benefits being offered. Thanks, Rob, for joining us today.
Sure. Thanks for having me.
For those who are new to Illinois Mutual, can you tell us a little bit about Illinois Mutual and then, kind of your history and role with the company?
Sure. So Illinois Mutual out of Peoria, Illinois, based a couple hours out of Chicago, old Midwestern company, 120 plus year old. What's exciting is it's a fifth generation ran by the same family, the McCord family. So it's deep rooted in the Midwestern values, and just a good all around, Midwestern company where you can pick up the phone and call someone. We don't have a large call tree. We have internal sales managers that are direct point of contact to help out your agents and also the clients with one point of contact. And those internal sales managers can help from everything from commission to submission throughout the entire building. My background, I started in the voluntary space in 2003, opened up an agency here in the Chicagoland area, and then represented all the major carriers for voluntary benefits. And right before COVID, I was offered an opportunity to come and be the national sales manager for Illinois Mutual. And then in December of last year, I took over as head of sales, AVP of Worksite.
Excellent. Definitely great background. Again, so, kind of looking in, where does Illinois Mutual fit, in this space? I mean, I know you look at, the carriers Standard and Principal and, Guardian and Emeritus. I mean, they kind of do the top white collar carve out, upper incomes. Where do you guys fit? And even on the life side, you have, Hancock and Principal. I mean, they do, some of the executive carve out type. Again, when you're talking, but you're talking higher income, 75,000 and more. There's some little requirements in there. Where does Illinois Mutual fit in that space? For if you were an advisor or a small benefit broker, where do they fit?
Yeah, where I see our fit is take care of the executives with one of those other carriers and then look at the employee base for Illinois Mutual. We're that blue collar provider. We go down all the way to 3 lives. So, if you have a opportunity for a small case, and then we go upstream as well. We have a couple of cases that are over 10,000, a lot of cases over 1,000 employees, but that niche market all the way down to 3 as well. Those employees are just as entitled to coverage than somebody who works at a large firm.
Okay. Well, I know we had talked a little bit, so what products do you guys have available? I know you said you had a little, kind of brief description of each, and then we can kind of, can talk back and forth on, what might be a good target for that client or, for that product.
Yeah. So I'd like to bring up a quick slide presentation, kind of a couple of pages on each product. And so our 5 products in the worksite spaces are individual simplified issue DI, our group DI, our term life, our accident, and our critical illness. And then for whatever reason, technology always fails when it fails.
Yep.
So I always like to lead out with our group disability. Our group disability is guaranteed issue with just two employees. So it doesn't matter the percentage of population. So, we go into that small 10-man group. If two employees enroll, it's guaranteed issue. If we go into a 100-life group, just two employees, it's guaranteed issue. And so that's kind of appealing, especially if you don't have the enrollment conditions or you don't have the penetration to meet a percentage of the population. 6 plan designs per group, 1 plan design only per group unless it's a takeover. We could do 2. Maternity is covered under any other sickness. Benefits are paid weekly. We can go up to 66 2/3% of gross salary, but I used to always teach my agents is never use 66 2/3% of gross. We always talk about 90% of take home pay. If I'm talking to an executive or an engineer or an architect and I say 66 2/3% of gross, they know exactly what that means. If I'm talking to a porter or a mechanic or somebody, working as a clerk at a hotel, and I say we can replace up to 66 2/3% of your gross pay, what they hear is for $18 out of my paycheck, you're only going to replace half my income, right? And I can't get by on all my income. And so the risk reward isn't there. And so, they choose not to participate. So we've always used in my agency, and I've taught my agents to use that 90% of take home pay. Employees seem to understand that a lot better.
Yeah, no, words are definitely everything. I had a quick question on we say you guarantee issue down to the 2 lives. Now, is that 2 participating, or how do you get your group, or is that maybe go into that a little bit? How do you determine?
Yeah. Yep. So 2 applications. So if I go into that 10-life group and just 2 of the employees choose to participate, it's guaranteed issue. If I go into that 100-life group and just 2 employees choose to participate, it's guaranteed issue.
Okay. So, and then is it payroll deduction only, or, can you do EFT on that?
Yeah, because this is a group product, this is the only product that we have in our portfolio that has to be payroll deduction.
Okay, well, that's good to know. At least from you give them the option. It doesn't cost the employer anything. They just need a slot on their payroll, right?
Correct. And then each plan does come with either a $10,000 or a $20,000 AD&D benefit, depending on the benefit amount of the disability, off the job coverage. And this plan is not portable because it is a group plan. Okay. Our most popular plan is Plan A and Plan D. So a 0-7, either 13-week or 26-week benefit. And for those employees who are looking to seek a longer than a 26-week benefit, and I always use a car dealership as a prime example, right? That has the full spectrum of employee wages, porters, minimum wage, finance managers, service writers, top-end mechanics, 6 figures. If I was to go in a group and offer disability, everyone would get Plan D. For those who are seeking more coverage, I would bundle my Worksite simplified issue disability. And then the reason for that is this plan, I can go out to 24 months or 60 months, where a lot of the other plans stop at 24. But I would layer this plan with a 6-month waiting period. And so that employee got hurt, the group plan starts paying on day 1. They're off for 6 months. That plan stops paying. The following day, this plan starts picking up, and they can get either 24 or 60-month coverage.
Okay, so when you're looking at, the group short term, tends, again, you're looking at, anywhere typically 3 to 6 months from a payout perspective, and then you move into one of the other products, that can move you up to 5 years. That's kind of where you're at, and then the short term group plan is only for off the job coverage, because again, in the short term, if they're injured on the job, they should have workers' compensation, right? That's the reason. Correct. For the just off the job only. But then once you extend outside of that, it looks like this other one has both. You can choose 24 or off the job only.
Correct. And some of the benefits of this plan is it can be done on EFT. Where we're seeing a lot of coverage throughout the U.S. is if you have a union. We're one of the few carriers that can write disability in the union space, and especially prior to COVID, if you ask a union member what their benefits were, they would list some of them, and they'd say something about disability. And then COVID hit, and we had a lot of folks that went off on disability. And what it found out in the union is that, yes, I have disability, but it's $250 a week or $200 a week, and I make 1,000. And so we've seen a big uptick post-COVID in the need for disabilities to offer, or unions to offer, an additional disability to get them closer to that at 90% of take-home pay.
Excellent. Any occupations in this with this that you know, I mean, obviously you think you probably have some targets, you talk the union, but are there any ones that are, you would say, aside from union, that are attractive, and any ones that, hey, you know what, if you're an advisor, yeah, stay away from, water tank painters,
Right.
Again, hazard explosive handlers. I mean, is there any groups that you just would say, no, this isn't good, or hey, even better yet is a handful of groups that you'd want to target with this? I mean, you mentioned
Right.
car dealerships, unions, probably not police officers and firefighters, I would assume.
So we do like municipalities if the police and fire total population is 25% or less of the employee population.
Okay.
And so, yep, we do really well in counties. We do really well in roofing. There's a lot of carriers that don't cover roofers, and so we give them a standard offer as if they worked in a law office. And the only other one that comes to mind is we don't like long haul truckers. We'll take short hauls, folks that are in bed at night, their own bed, but those that are over the road, we kind of discourage against them.
No, what about 1099? I mean, again, you have a lot of some of these companies, they have 1099 employees where they're straight with 100% with that employer. They're just don't need the benefits because of a spouse, or are the 1099 employees?
Yeah, we
accepted?
love 1099 as well.
Okay.
And so, we just quoted out a case now. They had 60 W-2 employees and 240 1099s. And so for that case, we're offering the group disability for the W-2s and then this disability for the 1099s.
Okay.
And we can set it up either a list bill for the client, if that's something that they'd like to do, a payroll deduction, or we can set this up on EFT Direct. And we don't use a third party like a Piedmont or Omega. We do our internal PDF or EFT, so that there's no cost per month for the employee, the extra charge that some of those other carriers use.
Excellent. So now, is the secondary plan, is this guarantee issue as well?
So it's guaranteed issue. Yep. If I have under 100 eligible employees, I need 20% participation.
Okay.
Over 100 eligible employees, it's guaranteed issue with just 2 applications.
Excellent. Well, there's some definite markets I think that our advisors could take advantage of here. I mean, you look at it, that short term, for that small employer, it can be too expensive for them to purchase, from an employer standpoint. But, the ability for an employer to offer it, and have that 2 life participation that's incredible.
Yep. The next plan I want to talk about is the plan I just talked about, and people are looking like, what do you even mean by that? And so back in January, home office, and I'd say this in jest, at Illinois Mutual, we have 3 distribution channels. We have individual life, individual disability, and worksite. And the individual disability channel stole my worksite product, the product I just discussed, and they're selling it on an individual basis. So simplified issue. So the same worksite questions, the same worksite rates, maximum of $3,000 benefit a month. And when they rolled this product out, I said, I'll sell more of this product on worksite than you do in the individual channel. And they're like, what do you even mean by that? You have a worksite product. Here's how we're positioning this product. We are one of the few carriers that are going to marketplace and saying we have disability coverage for your employees, and you can offer that same worksite disability on an EFT for spousal coverage.
Wow.
Think about that, right? So when you talk about things that separate you from the competitor or you from that other agent, there's no one who's talking about spousal coverage for disability, right? There's individual that's fully underwritten, but I can offer that spouse that same worksite disability product that I'm offering the employee and just set that up through EFT.
And that goes on, obviously based on the spouse's occupation.
Correct. Spouse's occupation, spouse's income. But again, it's just a great wraparound. In the conversation to the decision maker is you would agree that most of your employees are dual income households, correct? Yes. And would you agree that especially in today's day and age, we rely on every dollar? That's great that you understand the value of disability to protect your employee's income. But what would happen if that spouse became disabled? How would that affect the family budget? You can offer something that's voluntary that they can't get out on the outside.
No, that's a good positioning. Not only with the employer as a reason to provide it, but then from the employee, because I would assume the employee has to accept it for the spouse to get it. Correct?
No.
Oh.
Nope. So it could be they could both enroll or one or the other, because again, this is strictly an individual product based on EFT, based on simplified issue, but we're presenting it at the work site.
Right. So typically to the, one take it home and say, we have it, and the spouse would say, well, we're worried about your income, but we're also worried about my income. And that's kind of like, well, here's an opportunity to protect both incomes.
Yeah.
Without having to go to the spouse's employer, because typically, you might not have access to that spouse's employer.
Correct. So we're seeing a lot of traction, not only for new groups, but re-enrollments, right? You already have an existing client. What's the best way to get back in front of employees is to introduce a new product. And again, this one is kind of exciting because it's not something that's out there. So, we're not just coming back with an accident plan that everyone else offers or critical illness or something like that.
And this one is pretty much accept or reject, correct?
Correct. Yeah, it's 3 simplified issue questions. It's the same questions that are on the worksite policy. It is the worksite policy. All they did was market it on a one-on-one basis.
And I know one of the questions that comes up a lot, and I answer it, is pregnancy. How does that short term handle pregnancy? I always say, well, maybe correct me if I'm wrong on how I position. I said, if you have complications of pregnancy, whether that's pre-childbirth or after childbirth, that's covered. But once you're released, it's not a maternity policy. It only covers if you're disabled.
Correct.
Okay. Well, that's good. I'm explaining it correctly.
Yes. No, that's great.
So, but Ian, that's the part is, obviously if you put on bed rest, due to gestational diabetes or high blood pressure or whatever other issue prior to pregnancy. And then, if you have a cesarean, there's a set time period, before you're released to be able to go back to work. And then once you're released, then the policy stops paying.
Correct. And then there is a maternity benefit as long as you weren't pregnant, known or unknown at the time of application. It's a 6-week for a normal delivery and an 8-week for cesarean.
Okay.
And that's on all 3 of those products I discussed.
And that's once the baby's born and there's a 6-week benefit?
Correct.
Okay. So that's just assuming that you weren't pregnant at the time, or I know the one has a 9-month within the first 9 months of the policy being in force.
Correct.
Okay, so there is a payout after birth. It's just normal childbirth, 6 weeks, cesarean, 8 weeks.
Correct.
Okay, that's good to know.
Great. Our term life, I'd put this up against any other voluntary term that's out there. We have a 10, 20 or term to 65, 25 up to 150,000 of coverage. Any group that has under 100 eligible employees, it's 50,000 guaranteed with 15% participation. But when we reach that magic number of 100 eligible employees, it goes back to those two applications. And so over 100 eligible employees, it's 100,000 guaranteed issue for the employee, 50,000 guaranteed issue for the spouse, with just two applications.
And there's no age reduction, at 55, they can't get X dollars. It's the same as long as they're actively at work full time.
Correct.
They can get that.
Correct. And this plan, along with the last disability plans that we talked about, except for the group, are also portable. So Same guaranteed rate, same guaranteed benefit amount. It is guaranteed renewable. And then with Illinois Mutual, remember we said that maximum benefit amount is 150,000. If an employee signs up for 150,000, they forgot that they had cancer 3 years ago, and so they'd be denied that 150,000, but it would revert back to the GI. So if we had over 100 eligible employees, it would revert back to the 100,000. They wouldn't be disqualified and not be eligible for any coverage.
Excellent. That's definitely good.
Yep. And then it comes with this.
Yeah, so those are all portable, and they're basically like a personal term. Can they be both payroll deduct or EFT?
Correct.
And then, when you're looking at the plan options, and I forgot to ask it on the disability. So do you typically go in with one plan option or have a menu and let people choose, the 10-year, 20-year, or 65 term?
I try to limit the amount of options. Unlike a kitchen table sale where I can sit there for an hour, I have maybe 10, 15 minutes max with an employee. And so if I'm talking about 5 different products and each product has 8 different choices, a lot of times employees won't make a decision because they don't want to make a bad decision. And so, I do a lot of bundling, a lot of limiting, but then during the conversation, right? I think Worksite is the way to not only grow Worksite business, but individual business as well, right? Employees are in the mindset of talking about benefits at their job. That's what they're accustomed to. They get their health insurance there, their dental there, their vision there, their life insurance there. So when I talk about a $150,000 term policy, it's pennies on the dollar. It's great coverage, but it gives you the opportunity to have that conversation. Let me ask you a question. Is 150,000 enough? Well, no, do you have something, 500,000? Yes, I can help you with an individual policy. And that could be through whatever carrier that you write with, right? Maybe I'm looking for permanent coverage. Great. Let me get that information and I can run you an individual quote through ABC carrier. It doesn't all have to be Illinois Mutual, but use Worksite to gain that relationship because that vetting has already been done. When I make a cold call, I have to spend the first half of that call building credibility. They don't know who I am. But when I'm introduced to them at their job, the assumed vetting has already been done, right? The owner of my company wouldn't bring Rob in if they didn't check him out, right? So that whole credibility is already done, and I can talk right into benefits and then, do my exploratory and find out what the needs are for that family.
So an advisor, and us, we can work with you and your team, when we say, hey, we got XYZ employer and they're a car dealership, and you could come to us and say, hey, based on our experience, here are the plan designs that have been successful. Here's the plan offerings. And then we can take that, instead of having to figure it out on our own, we can rely on you guys to help us out, to what's been successful, for your teams.
Correct. And not only successful in setting up plan design, but me and my agency, we were really good at maximizing enrollment conditions. We had this thing called mandatory education, voluntary participation, so that we're not going to sit in a break room all day and somebody puts up a sign, and no matter what the sign says, it's perceived as, hey, Rob's in the break room selling insurance today. You're going to pay for it with your own money. Go see him if you're interested, right? No one comes in that day except the new kid, and he gets 8 sodas and 6 bags of chips because everybody says, oh, you're going in there. Here's $1, get me this, right? And so we're really good at, utilizing waivers, doing that mandatory education, voluntary participation. And I'll take it one step further. Not only will we assist you like we're doing today, but I'm a field guy by heart. I spend 90% of my time in the field running employer presentations, helping kick off enrollments. I'm a licensed agent, but I don't collect commissions. So if we had that car dealership, I'll go to the field with you and help you run that employer presentation. And then I'll help you set up the enrollment, and then I'll help you kick off the enrollment. The more field stuff I could do, the less home office stuff I have to do. And so I say I'm a corporate guy by title only on my card. I'm a field guy by heart. And so the more you can help me by putting me in the field, the less projects and that I have to do at home office.
Hey, amen. I've had 30 years in the home office, and I like this side.
Yep, for sure.
So,
For sure.
So
and I can see we're running a little bit short.
Yeah,
I could kind of just skip through the next ones real quick.
Yeah,
we have an accident plan.
Okay.
Yep. It's an indemnity program, 4 levels of coverage. What I do like about this plan is there's a $200 wellness benefit. So it's good, 1 per family per year. What we do at Illinois Mutual is next year when you're up for open enrollment, we'll run you a wellness benefit not filed report. So it shows you all the folks who have the wellness benefit and then those who didn't file. So that when you call to set up that re-enrollment, it's not, hey, this is Rob, it's that time of the year for me to sell more insurance to your employees. It's, hey, this is Rob, and we have 19 of your employees that haven't filed their $200 wellness benefit. I'd like to set up a time to come and service your group.
Okay. Excellent.
And then the last plan is our critical illness with cancer. So it's a lump sum benefit. So the employee chooses anywhere from 5 to 50,000. Pretty industry standard, whatever the employee benefit is, the spouse is 50% of that. With Illinois Mutual, if you cover an employee and a spouse, children are covered at no additional cost at 25% of the benefit. And then some of the riders that are on there, because we don't have a standalone cancer critical illness, but we have a cancer rider. So I always bundle it together. We talked about simplicity, right? So I do critical illness with cancer. There's also a reoccurrence benefit. So it's 3 events per covered person. So if God forbid somebody's diagnosed, we don't pay the benefit and then terminate the policy. And then there's a wellness benefit built into this plan as well.
Excellent. Well, again, Rob, I really appreciate you coming on today and, giving us this education, and, we will have it on our YouTube piece. But, again, I think this is a great opportunity. Again, you don't have to, I always said, the hardest thing for an agent is getting a client and then getting them to listen to you. So if you already have that, and, we can rely on Illinois Mutual to help us with the expertise, I think that's a lot of confidence that an advisor can go in and provide a value added benefit, because again, as I say, the more benefits you have with the client, the stickier they are, and the less likelihood that somebody else is going to come in and take them away.
Yeah, for sure. And all I would ask is make my contact number available. And if you have any prospects, anything like, hey, I'm even thinking about talking about to this group, where do I even start? Reach out to me and we'll help you through that process from, the initial conversation to submitting the app to getting your first commission check.
Excellent. All right. Well, as we wrap up today, I'd like to remind you that today's brew and our entire library are shared on the brew webpage and on our website, www.e4.insurance. Can't say that a lot of times. And also on our YouTube channel to keep up with all the brewcasts as they're released every Wednesday. Next week, there'll be a live brew at 10 a.m. Central. We're going to start August lineup with a focus on link benefits and long-term care. Thanks, Rob, and thanks, everyone, and we'll see you next week on The Brew.